We're the country's 6th largest employer. So what I'm going to do today is talk a little bit about how Kroger and these other big retailers like us think about capital investment. Real estate for us is a capital investment. We're taking shareholder money that we could give to the shareholders, and instead we're saying we're going to invest in our business because we can get you a better return by investing in our business than we can if we gave you money and you went off to the stock market or bonds and you bought such famous brands as JCPenney, as some of those other type of companies. And everybody get it? What's the first rule of real estate? I have the pleasure of teaching both at the University of Cincinnati and the Ohio State University, and I tell folks that that's not quite right anymore. It's location, location, and research. Because this may be a great location someday, but not for a while. And it's that a while that makes all the difference in real estate. It's about the timing of real estate as well. So, timeline of a typical project. Now in Nashville, Tennessee, where they didn't, what's kind of like, what's zoning? Back in the 80s, I could tell my executive team, if I can get control of a site, you could have a store in 2 years. I can't say that anymore even in Nashville, Tennessee. Some deals go fast, some go slow, but by and large, deals are slower now for lots of very good reasons. I'm not saying they're bad reasons. And so my point here is you have to have a lot of stick-to-itness. It will, if you're used to flipping shopping centers real fast, if you're used to signing small tenants real quick, you are in for the surprise of your life. This is the hard part for folks to understand, and that's how do things get approved. And it's a challenge in a corporate world because ultimately the final approver of a major investment like this, which could be $20 million easy, is the chairman of the board. I don't know any enterprise in the retail world that somebody at that level isn't the final approver of a real estate investment for a new store because they're so expensive. They're surprisingly expensive. Here's some questions that you might have as a real estate professional in terms of what's your role with Kroger. How does a large retailer or a large developer want to see something? Well, the issue is we'd like to see it, a complete set of information. And does that mean you have to provide everything that there is to know about a location? No. What it means is that you have an animating idea about something that you think could be done, whether it's presenting a tenant to us for a shopping center or pitching a site. You have an animating idea why this is a good thing. Present the information that substantiates your idea. So for example, understand where growth is in a market. Put it on a map. Understand what property values are. Give a good understanding of the economics of a deal. Are you sitting, like we so often ran into it in Nashville, where your site's a good site, but the augers took refusal against rock at 2 inches. It's not uncommon in Nashville for that to occur. So you need to have some idea what's going on underneath the property if you can. Want to understand where people live. What's the growth trends? Where are the new developments? What's the rate of absorption? All these things that you'd like to know in terms of, is this a good idea or is this not? So there's no form for that. You want to present the case in as clear and as succinct a fashion as you possibly can. In terms of inline space, understanding if you have a tenant you want to pitch to us, understand what their rental tolerance is, understand their credit, understand what their build-out needs are, understand their growth plans, understand the type of market they're going after, and be very careful to avoid our food restriction. So you're not going to be able to do a deli bakery in line with a Kroger store. No surprise there, but you'd be surprised how many of those we get. What geographic area and/or markets are targets for expansion? So what does that mean? It basically means if you see, is this a logical place for us to go? When in the cycle does Kroger like to look at opportunities? This is actually on a case-by-case basis. Right now we're in a cycle on one front of increasing capital expenditures. We're actually looking at new markets. We're actually looking to do fill-ins. We're actually increasing our capital expenditures year over year by about $200 million. And we made those numbers very public. So this is a good time to bring locations to us. In terms of the life cycle of a site, 10 years in advance is probably a bad idea. In other words, if there's a certain ripeness to a location, and I don't know how to describe it other than you could probably smell it. And when it smells right to you, bring it in. And then finally, to whom should opportunities be presented? They go to the division real estate department. We have about 18 division offices that are coast to coast. In Seattle here, it's Tim Hansen. In Portland, it's Bob Curry Wilson. And they have real estate folks that work for them, but they're your primary point of contact. You probably will see them at the ICSC regional meetings. It's good to introduce yourself and get to know them. Not just for new sites, but Fred Meyer especially owns a lot of its shopping centers and has lots of, there's a lot of opportunities to pitch tenants to that team.
We have a CCIM class called CI-102 and it's market analysis. And does that help if a broker can bring things in that talks your language with market share and location quotient, things like that?
Absolutely. We get so many calls from folks that have this animating idea, and the timing is so far off of being really developable.
Right.
And so to the extent that folks understand what really is going on in the market, understands how all the competition and how it might affect us. If we're looking at a new market and it has tons of competitors, right. That's one thing. If we're looking at a market that has no competition, that's another. But unless you understand truly the
gap analysis,
and what the opportunity is,
right?
Both those examples may be things that we shouldn't look at.
Yeah. Well, very good. Well, we don't want to waste your time. So if you know a little bit more about your business, we'll bring you better deals.
Absolutely.